Hello, welcome to Accounting Hub. I'm Professor George Scarpin, PhD in Accounting, and our topic today is maintaining a chart of accounts. So guys, if you haven't heard anything about chart of accounts, debit, credits, and so on, we have videos about accounting equation, T accounts, and journal entries. They are in our video description. So watch them and then go back here. And guys, by the way, subscribe our channel. It is very important to us, and like our Facebook video. And guys, in our video description there is also a link to our Excel file. All Excel files that we use on our videos, they are free to download it. So what is this account for, or this chart, or how do we, is the way how we maintain a chart of accounts? It's used to summarize in one place all the changes to a single account, a separate form for each account. It's not the general ledger that is by day. This is by account. For instance, how do we use it? Account number, the number of our account in our chart of accounts, date, items, what we are doing. Here we will leave it blank. Post, ref, what is the other account? For instance, we are purchasing supplies. So we debit, supplies, credit, cash. Let's consider we are working with cash. So accounting, cash, accounting number, whatever. The post ref is the number of the account supply. And then debit, credit amount, debit amount, credit amount, either debit or credit. And then the balance, either it will be debit balance or credit balance. We will check it later in our Excel file. So what is the relationship between a T account and an account for? First, the account information needed to trace entry back to journal page. T account, debit side or credit side. It is a copy and paste on a more complete way with much more information of our T accounts. And then the balance columns here. And that is also very important because usually on T accounts, we find only the ending balance. Here we can find the balance after each transaction. And here is the chart of accounts. So balance sheet account, assets, liabilities, and equity. That is accounting equation. And then this income summary here, we split it in revenue and expenses in another financial statement called income statement. How does it work? For instance, a group of accounts is called a ledger of accounts. A ledger that contains all accounts needed to prepare financial statements is called a general ledger. The name given to an account is known as an account title. Very obvious, right? And the number of an account is called an account number. So how does it work? For instance, supplies, 150. The first number, general ledger division, usually in our accounting softwares, number 1, assets account, 2, liabilities account, 3, equity account, 4, revenue, 5, expenses. And now the 50 location within general ledger is the account number 50. And the procedure for arranging account in the general ledger, assigning account number and keeping record current is called file maintenance. For instance, 560 miscellaneous expense, 570 supplies expense, both existing account. I want to create a new one right in the middle. So the number must be between 560 and 570. For instance, 565. Postage expense, the new account. If we are working with softwares, The software arranged it in a decent order by numbers. If we are doing it manually, we need to insert rows and so on. So we need to keep track about that. And then 580, water expense, and so on. Probably your instructor will give you an assignment to create these accounts, to create what we call again the general ledger. Okay? This is a ledger that contains all accounts and need to prepare financial statements. So if your instructor asks you to do that, it is not hard. And how do we open an account in a general ledger? Writing an accounting title and number on the heading of an account is called opening an account. For instance here, account cash, account number 110. And then we start typing our info. Write the account title cash and the account number 110. We will do it soon in our Microsoft Excel. And posting an amount from the debit column of a general journal, transferring information from journal entry to a ledger account is called posting. Not only debit column, but also the credit column. Before the thank you guys, let's go to our Excel file. So we have here the same Excel file for the accounting equation, video, T accounts, and journal entries. So these are our transactions. So we are moving from general journal to our general ledger. What is the difference? General journal, it is on chronological way, sorted by data. Here we will open one for each account. I think we are working with 10 accounts, so we have 10 general ledger here. Okay, so we have here 10 accounts in our general ledger. Let's the first one. January 2nd, receive cash from owner as an investment. Or, let's make it better. Let's work with this transaction. First one, cash, and Jorge is typing capital. So the first one, cash, account number 110. So here, account, cash. Oh, come on, account number 110. So what do we have here? Date, January 2nd. Whoa. This format here is no good. So let's format. So right click, format. My Excel is a little bit lazy today. Don't be lazy, Excel. Please. And here number, date. And this is the form that we want. January 2nd. And then if we click on this mark here, we can copy and paste the format to all of our general ledger. Almost a live video here. And I think it's this one. I think we are good to go. Okay, cash 110, January 2nd. Item, let's leave it blank. Post ref, what is the other account that we are working with? 310. So 310. Do we need a debit or credit here? Cash is debit. So debit $5,000. How much the balance? Beginning balance, nothing. So our balance is our transaction. So our balance is debit 5,000. The second one, Jorge Scarping Capital. It is the account number 310. Same date, January 2nd. Now, the other account is 110. So we copy the 110 here. And now this is a credit account. So credit account here. And again, our ending balance is only this journal entry. So this is the first transaction. The second transaction here, supplies and cash. We have no general ledger for supplies yet. So let's open it. Supplies. The account number for supplies is 150. What is the date? Also, January 2nd, item nothing. Post-ref, what is the other account? Cash, 110. It is also a debit. Debit supplies, 300. Again, the balance is the debit. Cash. Do we need to create another one? No, this is wrong, and this is the most common mistake. We have only one ledger per account. So here, we already have our cash. So 1, 2, January 2nd again. Journal entry, the other account is 150. And now we have the credit, 300. Credit, 300. And now, what is our ending balance? Our ending balance, and then we will be able to copy and paste the formula. It is the previous balance plus any debit less any credit. $4,700. We don't need other formulas here because they have only one transaction. Third one, prepaid insurance and cash. Prepaid insurance, nothing yet. So, prepaid insurance. Account number 160. 160. Date, January 3rd. Post-ref, cash, 110. Debit, 200. So the ending balance is the 200. The credit is cash, so we go back to cash. January 3rd. The other account, prepaid insurance, 160. A credit, 200. And we can copy and paste the formula. Ctrl-C, copy, enter, or Ctrl-V, paste. Our formula good. Third transaction, let's go to number 4. It is 11, so we will go through a lot of transactions here. Supplies, we already have supplies. Supplies, they are here. I don't remember the day. 5th, January 5th. What is the other account? 210. Also debit, 250. And now the same formula, equal debit plus, or equal previous balance plus debit less minus credits, 550. And the other account, let's take an empty one. It is accounts payable. So let's copy and paste here. Accounts payable 210. Accounts payable 210. Date, January 5th. The other account is supply 150. Credit 250. Balance is on credit side. 250. Okay, very good. And guys, if it is too fast or not so clear, watch this video how many times you want. And remember, this Excel file is free and the link to download it is in our video description. So, the transaction number 5, we are paying it. So, accounts payable. Canyon, 100. So, here, accounts payable. January 9th, cash, 110. So, 19. Cash 110. Now it is the debit 100. And here, guys, the formula is the opposite because we are talking about a liability account. And the normal balance of a liability is a credit. So previous balance plus credit less debit, 150. And the other one is cash, 19. What is the other account here? 210. Credit, 100 and 100. Sorry. And copy and paste the formula again, $4,400. Now, sales, cash and sales. So debit cash. The other account is for 10, and the date is January 10th. So for 10, debit, how much it is? $2,000. Oh, very good, 6,400. And the other account is sales. We have no sales yet. So sales. For 10, if I'm not wrong, for 10, the other one is 110, date 10th, January 10th, credit $2,000, balance $2,000. Next one. Oh, almost 1, 2, 3, 4, 5, if I'm not wrong. Accounts receivable and sales. So accounts receivable, we have no ledger yet, so 130. Accounts receivable, 130. Here, this 12. Post ref. The other one is sales for 10. Debit 800. First one, only debit. And the other one is sale. It is right over here. Whoa. For 10, it is a credit. Oops, never type. If you have the number anywhere else, sales, and then the same formula of accounts payable. Equal beginning balance plus credit less debits. $2,800. What else? 8. Communication expense and cash. No ledger for communication expense yet. So let's do it here. 530. Date. Oh. Post ref. 110 is cash. Debit. 350. Debit. And the other one's cash. Let's go back to cash. 112, 530, a credit, 350. Copy and paste the formula again. And what else? Equipment rental expense and cash. Equipment rental, no, nothing yet. So the 540. Date. January 13th. Credit cash. And we start knowing the numbers. 550. Formula 550. And cash. 540. And credit is 540 here. Equipment rental, 550 the amount, $5,500. And only two. Cash and accounts receivable. Here, guys, we have for both. So the first one, cash, 16th. Other account is 130. Debit, $300. And we can copy and paste the formula. Let's go to the accounts receivable. No accounts payable, no sales, accounts receivable. 116, oops. 116th, if I'm not wrong. Yep. Other account is 110. Now a credit 300. And we can copy and paste the formula. No, we cannot copy and paste the formula. Beginning balance plus debit less credit, $500. And the last one, a drawing. We have no ledger for drawing. The last one. Account number 320. Date 116. The other account is 110. Remember? Cash. Whoops. It is debit. 1,000. Formula 1,000. And cash 119. The other account is 320. A credit $1,000. And here we go, 4,800. How do we present it? Remember, the journal entries is on chronological way. This is based on chart of accounts. So when we summarize it in a report, we would start with cash, then accounts receivable, then supplies, then accounts payable, then owner equities, then revenue, then expenses. So we would sort it in the same order of the chart of accounts. Sorry. How do we know if these numbers are right? Easiest way, double check with the T account. Cash 4,800, cash 4,800, and so on. Another way, it is checking. We create here debit and credit. So let's sum all of our debit and then copy and paste the formula to sum our credits. So the first one, debit, this one, plus this one debit, nothing but okay. Then this debit plus this debit plus this debit, oops, two rows, this debit plus also 2 rows, this debit, plus this debit, plus this debit here, plus this debit, plus this debit here. $7,700. It will not match with the sum of our journal entries because here we are summing the balances. But on T accounts here, if we check with the huge T account, oh, maybe we are facing some problems. And then the credit, oh, we are facing a debit problem here. It is not matching. So 48, 5,000, good. Supplies 550. Where's our supplies? 550, we are good. Prepaid insurance 200. Let's see if we sum it. AD 4. I think we sum it. 84. Very good. Accounts payable 150. Where are you? Accounts payable 150. We are good. Sales 2,800. Oops. 2,800. We are good. Accounts receivable $500. We are good. Communication 350. 350. We are good. 550 and 1,000. Apparently we are good. Apparently is a formula problem here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay. Let's delete it. Start it all over again. The first one plus. The second one plus. The third one plus. The fourth one plus. The fifth one plus. Sixth one plus. 70 plus. Eighth plus. Whoa. Eight plus. Ninth plus. 10th. Now it's okay. Probably some Excel formula. As I tell to all of my students, accounting is easy. Algebra, it is much harder. So now our checking is good. And then let's do the checking of the journal entries. And also do a checking here. Equal sum. All of our numbers. Whoa, 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 whoa. And then checking our numbers here as well. Okay, guys. So that's it. Thank you so much. It is not an easy one. Okay, guys. So pay attention. Watch this video as many times you need. Please leave it here or email me at jscarpin@gmail.com. Have a very nice day and God bless you.